Welcome back. The key indices holding in the greens of lows. So let's talk about individual stocks then. We have with us the management of Tilaknagar Industries. Amit Dahanukar, who's the chairman and managing director of the company, joins in. Remember, they recently repaid some of their debt, prepaid part of their outstanding debt of Edelweiss Asset Reconstruction Company. Over the last 1 year or so, the stock price has doubled, but in just the last couple of months, it's been consolidating between 90 to about 120. Thanks a lot, Amit, for joining in. First up on this debt itself, you've prepaid about, 54 odd crores. The balance debt of close to 127 crores, I understand, will be waived off when the restructured debt is paid. So to that, I just wanted to know, what exactly does your current debt stand at? By when do you get entirely debt-free? And what's the timeline of payment of your restructured debt?
So just to clarify, Nigel, this 127 crores now has been will be written back by this company as of 31st March. The obligation was to pay this debt of 54 crores by 31st March 2024. But since the company's operating cash flows were quite healthy and we had also raised a significant amount of money in the past 18 months and were very well capitalized, the board considered it prudent to prepay some of this debt before it was due, and we will also be getting the write back of 127 crores. So that leaves us with a debt of approximately 180 to 190 crores.
All right.
Okay. All right.
And,
Hi, Amit.
I believe that within the next 12 to 18 months, company should be near debt free.
Oh, that is encouraging. Hi, Amit. This is Nigel here. Mangalam had asked you the first question. Amit, so you'll be saving then considerably even on the interest cost, right? On this 180, 190 crores, what is the current borrowing cost?
Yes, Nigel, will be saving significantly on interest costs. I think just to give a little perspective to our viewers, I think in March 19, the interest cost of the company was 180 crores. Whereas in March 22, it was 60 crores. And in March 23, which is this year, it will be less than 40 crores. So the company has made significant efforts towards reduction in both the debt and the interest costs also have been coming down. I'm quite confident that the year going forward also, we will be able to slash this finance cost by close to 25%. And of course, this money which is being released consequent to the interest savings will be plowed back to grow the business further.
All right. So good on the balance sheet then. So let's talk about business itself. The third quarter, we saw volume growth of what? Almost 40%. You've done volumes of 24.3 lakh cases. Just wanted to understand if this run rate sustains, what's the capacity that you currently have? Does that increase? Utilization increases? What kind of volumes are you gunning for going forward?
So this year, we have, of course, the industry for 9 months has grown approximately 15%, whereas our growth has been 40%. A lot of that has been aided by, one-time correction since the company was short of capital. We were having it, we were finding it difficult to subscribe to, the growth opportunities which were there. But having raised adequate capital, I think that was a correction which happened in terms of the 40-45% growth which has happened. But going forward, of course, there's a great momentum which is already there with these numbers which have come out in Q3. We are quite confident that we will continue to grow. I think the industry, for next year, we will anticipate the growth to be around 10 to 12%. But I'm quite confident that our growth will be in the upper teens.
Okay, all right. Amit, then give us a few details. I've gone through your press release and you're saying in the past quarter you did 300 crores per quarter, which is the best ever. So can you continue at this sort of a run rate? Now, at the 9-month mark, you have done close to around 7 million cases, 6.8 million cases. What is the outlook? What do you end this year with? And by next year, what do you end at?
So I think by this year, it would be reasonable enough. We're close to the end of March. So anticipate that we should end somewhere between 9.5 to 10 million cases for this year. And going forward, I think the growth outlook will be upwards of 15%.
Okay, all right. So for next year, then you'll be doing closer to around 11 million cases. Yeah, are we getting that correct? Just doing mathematically?
Yes.
And 300 crores per quarter is very good in comparison to what you've done in the past. So if I annualize that, for next year, you should do at least 1,200 crores, or will it be even better than that? Because you've taken some measures as well. Should it be in the vicinity of around 1,300 crores of revenues?
It should be better than that. That would be my approximation. Yes, it should be better than that.
Better than 1,300 crores?
Yes.
All right. Amit, on your operational side, I just wanted to understand the revenue mix of the company. Now, currently, majority of your revenues come in from brandy. Point number one is, are you looking outside of brandy? Point number two is that majority of your revenues are also concentrated towards the southern part of the country. So are you looking at expanding outside of that? And the third point is you've entered super premium category. So your revenue mix. So on three things, your product mix, your geographical mix, and your revenue mix. What sort of outlook do you have?
So the product mix definitely is very skewed towards brandy. In fact, we have been India's largest selling premium brandy with Mansion House for several years now. I think in 2021, I think we became the largest selling brandy in India. And I think in 2022, the brand Mansion House has just grown. I think in 2021, it was 5.3 million cases, and 2022 calendar year, we sold more than 7 million cases. So the brand has demonstrated a phenomenal growth. I think so. There will be no defocus from brandy. I think brandy has and continues to be our core strength. So we will continue to focus on brandy for the next 18 to 24 months. But I think this is a good time for us as an organization, as a corporate, to look at next categories. Since the balance sheet has now been significantly deleveraged, we have adequate capital available to explore growth opportunities now outside of brandy. So certainly, I think going forward, in terms of the next 3 to 5 horizon, we would want to, have slightly less focus on brandy, and we will start investing in other categories now. Both in terms of product and in terms of geographic mix also. I think as you had pointed out, the geographic mix is, yes, it is very much skewed to the south, but let's not forget that even if you look at a national footprint, the southern markets, they account close to around 60 to 65% of overall IMFL sold in the country. So South is a large market. We have been strong traditionally in that market.
Yes.
We've grown in strength in this year. And I think, but going forward, I think in terms of diversification, yes, I think it's the right time for the company to now start seeding markets with a long-term objective.
Okay, all right. Very quickly then, Amit, before we let you go, what is the margin outlook that we should be looking at? You have improved to low teens, close to around 12-13% is what you have done in the last few quarters. So what is the broadband out there? And I'm looking at the promoter holding. There was some dilution as well. Promoter holding has come to around 42%. Are you comfortable at these levels, or do you think the promoter holding can go down further?
So the promoter holding, I'll take the second question first, which was the promoter holding. So the promoter holding, more than 12 months ago, it was upwards of 50%. But as I had mentioned earlier on the call, the company has, raised significant equity from marquee investors. In fact, we have done 3 rounds of equity raise in the preceding 18 months. So consequent to that equity raise, the promoter holding has gone down. Currently, it stands as 42%, which you have pointed out. We are quite comfortable maintaining it at those levels. And I do not see any equity raise in the imminent future, any more further equity raise in the imminent future. I think we are capitalized, and we'll use our operating cash flows now to fund future growth. I think the first question you mentioned was in terms of margin pressure. So if you compare with 12 months ago, certainly there has been acute margin pressure. Inflationary trends have been quite significant on our packaging and raw material costs. I think both on both fronts, the inflation has been upwards of 20%.
Right, Amit, we're a little short on time. If you could give us a band on the margin front, what is it? Should you work with 12-13%, 13-14%? What should it be?
I think for the near term, it should be 12 to 13%. But for the medium term, I do expect that the margins will correct.
All right. Thanks a lot, Amit, for joining.
Near term will be around that.
Okay, take that point.
Thank you for having me.
All right. Good luck with all your plans going forward, diversifying outside of the southern markets in the next 3 to 5 years, but guiding for almost 15% sort of volume growth coming by in the next year, believing that the margins could be operating in a band of 12 to 13% in the near term, perhaps increases going forward. The street likes that. Bit of a spike on the stock of Tilaknagar Industries. Take a short break, come back, get you more on the markets and individual stocks. Stay tuned.